time around, it was basically the entire business cycle. It led us into the crash. What happens as prices keep going up now and rates keep sinking?
Well, I think housing is kind of treading water. I think Diana nailed the reasons why. I mean, we have a lack of inventory, and I think there's growing concerns about the economy by potential home buyers. I'll throw one other factor in. That is tightening underwriting standards. So lenders are very nervous about high debt-to-income lending, so they've pulled back on that. So all those things are contributing to weighing on the housing market. But, in a downturn, housing is not going to lead the way like it did in the last recession. And unlike in previous recessions, I don't think housing is going to be the major contributor to the downturn. There's a very severe shortage of available housing, new housing, and that'll put a nice floor under house prices and rent. So it'll suffer in a recession, but it won't be a contributing factor, or certainly not lead the economy into recession.
Do you see anything, Mark, that you think would be the leading indicator or lead us that way this time around?
Well, I mean, certainly manufacturing, transportation, distribution, all back to the trade war. I mean, the trade war is doing very serious damage to the entire global economy. We saw it in Europe. The German economy is arguably in recession. The Chinese economy is struggling. We saw central banks throughout Asia cut interest rates because they're very nervous. So the global economy is struggling, and that's going to hurt manufacturing here, transportation, and distribution. Here's one other soft place, though, and that is, and we had been talking about this leveraged lending. This is lending that's being done to companies that are already pretty highly levered. Very aggressive lending there. Those companies are going to struggle if sales begin to weaken. And then at some point they're going to have a Hobson's choice. Do I make my debt payment, or do I cut back on my investment in hiring? And that's the fodder for a recession. So I don't think the leveraged lending problem is the catalyst for a downturn. That's trade.
Okay.
But if trade weakens the economy, that's going to make problems very difficult for those businesses.
And Diana, meanwhile, is there a level in rates? You mentioned that the conforming loan rate went below 4% last week. What are the levels to look for to see a bigger response if we're going to get one in terms of housing demand?
Well, back in 2012, 2013, when we did see that big response and an increase in home sales, home buying, that was when we saw rates around 3.5%, even 3.25%. So we need to see them go a little bit lower. We also need to see more confidence in the market, not just from buyers, but from builders as well. It's really surprising to me to see that as mortgage rates were falling from January until now, that the home builders really were not taking that sign to move forward and build more. Housing starts are actually down 6% in the first half of this year from the same period a year ago. So why aren't builders having more confidence? Why don't they expect more volume? Why aren't they preparing for that? That's the big question out there. Maybe they don't see that buyers are going to be coming in at these rates because affordability is just so bad right now that even these lower rates are not offsetting that.